Well, let's get a reader on the top macro and market themes that we're watching this week. And Pete McGuire, for that, is joining us live in the studio. Pete, thanks for joining us as always.
Good morning, Daniel. Hello, Ingrid.
Well, we're seeing the markets really react not too favourably to these reinfections that we're seeing in the US, even in Victoria at the moment. Are we finally seeing this balance between market exuberance and a reality check?
Well, it's a hard one to comment on when you're looking at the numbers coming out of California, Arkansas, Florida and Texas. They seem to be ramping up. California's shooting the lights out as far as numbers. So all of this optimism, is it overbaked? Is it baked in already to the point that you've front-loaded everything for this time next year and the equity rally has been just so strong to the upside? They're the big questions, they're the unknowns, and how this plays out over this next quarter and the following quarter leading into the end of the year, Christmas, is going to be a very, very torrid time, I think.
Yeah, because Peter, we were talking about this a little bit just then off air, but you know, when you look at the amount of stimulus being pumped, of course you see markets outperform on the stimulus efforts. Is there a point where that comes to an end though? I mean, stimulus, I guess, doesn't run out. If you can do it unlimited, but it certainly has an impact, right? If you're the Fed,
it doesn't run out, Ingrid. You never bet against the Fed, as they always say, and that's a great question. But the issue, quite simply, is if you're now moving into the point that you're buying junk bonds of corporate debt, what happens to the consumer or what happens to the layman on the street that says, well, I can't get a job, the company that I'm involved in doesn't exist anymore, or its headcount is cut dramatically? Do we look at just keeping these sort of stimulus packages going into 2021? They're the unknowns. That's what we'll have to work through. So this is just unheralded. We've never seen times like this, and the rally to the upside has just been absolutely monstrous. So the PMIs coming out, as you mentioned earlier, in Europe, we'll see those numbers start to come through over the next matter of couple of days, and there's no doubt you're starting to see businesses going from that lockdown phase to reopening, looking at how they move forward over this European summer.
Because we know the economy and markets are very different things, and certainly on different tracks, but it almost looks like there's only one way for markets to go, and that's down. But we know that's not the case because we've seen it over the last few months. Yeah,
it's a stimulus lead, 10 trillion, and now you're moving possibly up to 13 trillion. The firepower is just enormous, as we know. What's going to happen as far as King Dollar? Are we going to see a change there in sentiment? You're looking at China, what happens there as far as stimulus measures, and what do they do to really look at possibly cutting rates or just, re-stimulating and keeping that engine moving forward. So we're in uncharted waters. Business professors and economists don't even know what's going on. So the layman in the street is probably just, up to our eyeballs in bullishness as far as retail transactions, and that's been an enormous trade over the last 2.5 months. Will it continue? Let's just wait and see. This time next month will be an interesting time.
Well, we watched the data points closely. We watched the price action even closer, and we've seen gold continue to rally pretty strongly into that weekend session. It's now sitting at $17.45 the ounce. We've got oil, the WTI, almost touching $40. There's some really interesting price action on these markets to start with.
Exactly. Well, the compliance side, let's just touch on oil first. Compliance across the OPEC plus sector, they're fairly confident that they've been very much adhered to. There was talks there as far as Iraq, but that seems to be put to bed. So it's been fairly strong, and the consumption and the global demand picture is picking up. Does it continue to pick up? You'd see Alan Joyce coming out and say, don't see any Qantas flights till October. All of these airlines, I'm a frequent flyer across a number of international carriers, everyone's saying, can you buy now? Can you book a flight now? So I think business is fairly fractured. So is that demand really going to pick up over the next quarter as far as consumption for oil? And then if you look at the gold picture, well, that's fear. And I think if that US dollar comes off or the equities come off, there's no doubt you're going to see that punch higher.
It just seems gold is a good trade at the moment, given there's a lot of factors playing into it. I mean, not only, in terms of what's going on with stimulus, but also what's going on with fear, as you say.
Exactly. 30% up as far as dollar value in the last 13 months.
What's the downside risk for gold at the moment?
I don't know if there is any. The only thing would be if people get really hammered as far as margin calls, they'll be liquidating gold positions, and that's what we saw a couple of months ago when it tailed out to 1,500 odd. Then it's bounced back up, but that could be the only thing I think to really worry it in the short term. I don't see anything in the big picture to really cause chaos to the gold market.
But that was an extremely strong acceleration to the downside, almost never seen before.
Exactly.
Would we expect that kind of speed of pullback if things really start looking a bit hairier at the moment?
Who knows? If you've got algorithmic
like that
trading, if you've got people with margin calls and leverage, the biggest fear is that if everyone's piling in, are you using leverage? If you're trading 1-to-1, it's a different matter. But if you're using derivative tools and you're punching out, 50 to 1, 100 to 1 leverage, that's the great concern because people get spanked so heavily that they've got to liquidate positions and they've already closed that out and they need to take money off the table off a different trade that could be in profit. So that can be across different sectors. Some traders have 8, 10 different open positions, up, down, whatever else.
Yeah. Peter, can I ask you about oil? Because we can't have you on and not ask you about oil. It's continuing to rise, the prices a little after that huge crash we saw in April. What do you expect for oil going forward? What are the drivers?
The driver's got to be consumption and got to be compliance from OPEC+. So if you see consumption really start to gain momentum over this Northern Hemisphere summer, that means driving, that means airlines, that means trucks, everything just seems to grow across, and predominantly out of Europe and US, maybe it's going to happen. I mean, the lockdowns, we're understanding what's happening in Euroland, so they're really looking at driving more consumption. And if you're looking at the US, maybe it's the time. Trump says, well, we don't wear masks. If you get coronavirus, so be it. Unfortunate, but we've got an economy to run. In the
inventory stakes, though, inventory could, continue to be pretty high. Does that put a cap on oil prices, do you think?
Well, it does a little bit. But I think maybe a couple of dollars from here, but who knows? I mean, we're only going back a month and a half ago, or 2 months ago, and you're at negative 38. Now you're at plus 39. Yeah. So it's hard to forecast what's going on because there are so many moving parts to make up the whole equation. I think a couple of dollars up from here, but it's very much you've got to be very conscious of the big picture. You can be wiped out on oil and have 6 or 8% retracements in a trading session. So it's hard to say, well, we're going to maintain that bullish stance.
Absolutely. Fascinating start to the week, Pete. Appreciate, as always, you coming on the program. That's Pete McGuire from XM Capital.
Yeah, lots to watch, as always.